Hey everyone, welcome back to the Explainer. Today, we're diving into an absolutely fascinating corner of the digital world. We aren't just skimming the surface of what cryptocurrency is, we're actually doing a full-blown case study on how digital entrepreneurs create their very own cryptocurrencies from the ground up. 43 lakh rupees. Let that sink in for a second. At the time our source material was capturing the market's frenzy, that was the going rate for just one single Bitcoin. It's wild, right? We're talking about a completely virtual asset, money with literally no physical shape, commanding this astronomical value. It just perfectly highlights the massive, almost unbelievable scale of virtual money in today's economy. Now, this kind of explosion didn't just happen overnight. Back in 2009, Bitcoin was just this tiny niche concept for tech geeks. But skip ahead to 2017, the Indian Bitcoin market alone hit a staggering $4 billion valuation. That rapid, rocket ship growth is exactly why major global media outlets simply cannot stop talking about crypto. All right, so here's our roadmap for today's explainer. 1. The rise of crypto. 2. Coins versus tokens. 3. The power of blockchain. 4. Creating your currency. And finally, number 5, the reality check. Let's jump right into section 1, the rise of crypto. So the hype goes way beyond just Bitcoin, right? You've got alternatives like Ethereum and Dogecoin making huge waves. But why go through the trouble of building your own? Well, if you're a digital entrepreneur handling massive volumes of online payments, launching your own currency is a real game changer. It lets you expand your digital ecosystem and keeps your users super engaged within your very own digital economy. Moving on to section 2, coins versus tokens. But before you go launching anything, we really need to clear up a massive point of confusion. Think of tokens kind of like the loyalty points you earn at a local arcade or a pizza place. You can use those points to get another pizza at that specific store, but you absolutely cannot take them to a bank and cash them out. A coin, on the other hand, lives on its own blockchain and has a much broader exchange utility, acting a lot more like actual standalone money. Knowing exactly which one your business needs, that's step 1. Next up, section 3, the power of blockchain. To actually understand how these coins exist and hold value, we've got to look under the hood at the tech keeping it all together. At its core, a blockchain is basically just a highly secure digital ledger. But unlike a traditional bank, where some central boss controls the server, a blockchain is entirely decentralized. Every single transaction is recorded and validated by a massive distributed network of computers, which we call nodes. And because there's no single entity calling the shots, all those network nodes have to actually agree. They must reach a consensus for a transaction to go through. This makes the system incredibly tough to hack. I mean, a hacker can't just break into one server. They'd have to hack the entire global network all at once. That built-in distributed security is the absolute bedrock of a digital currency's trust. All right, section 4, creating your currency. So, how do you actually pull this off and build your own? Well, it's a step-by-step process. Step 1, you pick a blockchain provider. Step 2, you code and customize your source code. Step 3 is all about building trust, meaning you draft a solid white paper and secure a third-party audit. And finally, step 4 is launch day, offering your currency to the public through an initial coin offering, or ICO. Let's look a bit closer at step 1. The great news here is you definitely don't have to build a blockchain from scratch. Platforms like Ethereum were actually the first to let users piggyback on their highly secure networks to create tokens. And today, you've got a whole menu of options, like Waves, Blockstarter, EOS, or CoinList to securely host your project. Now, the timeline for all this is honestly pretty wild. It can take anywhere from 5 minutes to 6 months. How on earth is that gap so big? Well, if you just want to copy and paste open source code for a bare bones token, an experienced coder can literally have that up and running in 5 minutes. But if you're building a customized, legally compliant, fully audited project with a real team, yeah, that's going to take you a solid 6 months of hard work. Which brings me to a question I want to throw right back at you. If you can really just copy the code in 5 minutes, is launching a successful crypto project actually that easy? We hear all these crazy stories about overnight crypto millionaires, right? But the reality is, just tossing copied code onto the internet does not magically create value. Real value demands trust, genuine utility, and a massive amount of behind-the-scenes grinding. And that leads us straight into our final segment, Section 5,
the reality check. Look, there's absolutely no denying the hype. As Nishal Shetty, the CEO of Wazir X, points out, investing in cryptocurrency is a massively growing trend in India. The local enthusiasm is off the charts. But we've got to heavily caution you here. All that enthusiasm doesn't just erase the very real risks involved.
Just look at the regulatory landscape. While buying Bitcoin isn't banned or illegal in India, the RBI and the central government completely wash their hands of it. They do not take responsibility for your investments. That means you, the individual, take on 100% of the risk. So if you're actually planning to launch a coin, this is exactly why bringing in professional legal advisors and top-tier tech teams isn't just a good idea, it's practically mandatory. Ultimately, crypto is a massive double-edged sword. On the plus side, you get lightning-fast, borderless transfers with super low fees. But contrast that with the harsh realities. If you make a mistake and send funds to the wrong address, it is completely irreversible. Gone. Plus, mainstream acceptance is still pretty limited, and the market rates are incredibly volatile. Your investment can literally soar and crash in the exact same afternoon.
So, I want to leave you with this final thought. Knowing that there's zero central control to bail you out, extreme market volatility, and some incredibly complex technical demands, are you fully prepared to take the risk of building or even just buying your own cryptocurrency? It's a frontier full of incredible opportunity, for sure, but it demands rigorous, independent research. Thanks so much for hanging out with me for this explainer, and I hope this breakdown gave you a much better grasp of what really goes into digital currency. Catch you next time.